going with this, it relates to the stock market, because if the slowdown occurs, like I think it will, and still some people now are talking a little bit about the probability of a recession. I think it's over 90% this year. So as a result of a slowdown, of course, sales go down and profits go down. The Smoot-Hawley tariff was announced in March of 1930, and then the stock market started really crashing until July of 1932. It hit a low that it was 83% lower than it was when the tariffs were announced. And let's get back to the earnings thing a little bit. And with a recession, sales go down, and if sales go down, profits go down, earnings go down. And the consensus on earnings was 15% growth this year. Then they brought it down to 13%. And most recently, they brought it down to 10%. I think it's going to be zero. I've always said I thought the consensus is too optimistic. And what does a tariff do? A tariff is a tax on international transactions. So it drives a wedge into those profits or those benefits or the surplus resulting from the trade. And it takes it away like any tax and puts it in the government's pocketbook. So that's why earnings go down. The trade aspect, tariffs take away some of the surplus generated by international transactions. It's just that simple. The money supply is the fuel for the economy. And when the money supply contracts, like it's done since the summer of 2022, that slowdown gets transmitted into the economy and the economy slows down. That's why I keep using this expression, well, a slowdown is baked in the cake. And it has nothing to do with whether who's president or any of those things. It's just a function of what the money supply is doing. So we had that coming on us this year. Most people, by the way, haven't seen this coming at all because they don't pay any attention to the money supply or the quantity theory of money. And then all of a sudden we get a second aspect coming in, and that's the Trump tariff. And that has really thrown a lot of sand in the gears, shall we say. And that will just make the slowdown even worse and probably will have a technical recession. And so that's why people are concerned. The other reason is that something I call regime uncertainty, and that is that when you get tremendous activism in a government where they're changing kind of everything, you get regime uncertainty. And that's different than the kind of pinpointed little micro uncertainties that develop about this thing or that thing. It's like everything. And the only time we've had that, by the way, is with Franklin Delano Roosevelt and the New Deal. The New Dealers were changing everything in the 1930s with Roosevelt, even doing things like making it illegal to hold gold, and even talking about packing the Supreme Court. The same kind of rough scenario that has enveloped the Trump administration, where just everything is on the table to be torn up and changed. And that creates regime uncertainty. Now, what happens with regime uncertainty is that not only the consumer hunkers down and consumer sentiment goes down, but more importantly, investors hunker down and they stop investing. And in the New Deal, by the way, the regime uncertainty was very serious. There was essentially no investment in the United States from 1929 until the end of World War II. And the resulting drought in investment meant that the Great Depression actually lasted a lot longer than it would have if we wouldn't have had the New Deal. The propaganda was happy days are here again. That was their slogan. What they were doing is just slowing everything down, making the Depression much worse. So you have that aspect now coming in on top of the monetary contraction. The scenario is exactly the same as the Great Depression. John Greenwood and I are the only ones that have accurately made a forecast of where inflation would go up to when they goosed the money supply, started goosing it in 2020 after the COVID pandemic started. So we said it would go up to 9%. It went up to 9.1%. They were all talking about transitory and supply side shocks and all this other garbage. And no one was paying attention to the quantity theory of money. And inflation always results from the fact that prior to the inflation, there's been a big upward tick in the money supply. And with a lag, you eventually get inflation coming into the system. Then the Fed put everything in reverse and started contracting the money supply once they hit the panic button. And where did Greenwood and I say inflation? The end of December 2024, we said it would be between 2.5% and 3%. It turned out that it was 2.9%. It was up on the high end of our range. And now we're into February's number for 2025, and we have 2.4%. It's actually a little below the low end of our range that we had for the end of 2024. So we've nailed this thing completely using the quantity theory of money. Remember, inflation is always and everywhere a monetary phenomenon. I think people are overexcited about the inflationary effects of tariffs. They won't have really any inflationary effects. They will have big effects on particular prices, on relative prices. The consumer price index that you just put up there, 2.4, it contains over 300 items, and some are going up, some are going down, some are staying the same. You put a tariffs on, and depending on what the goods are, some things will go up, but if the money supply doesn't change, the overall picture will remain pretty much the same, which doesn't mean that consumer price index might become a little bit more noisy and volatile with the tariffs as those things work into the system. But the overall thrust of the consumer price index will continue to go down, and it might even hit the Fed's target at 2% or maybe even a little below this year. One thing you said that some stores are putting a so-called tariff premium or tariff tax on the goods that they're selling. Now, that has an aspect to it that's interesting, and that is tariffs do reduce the level of competition. You know, the best antitrust policy in the world is open trade, because if you start misbehaving and start screwing your customers, some foreigner is going to jump in there and take you out. So that's one thing. The overall thing, you have to stand back and say, what is the only reliable theory of national income determination? That means, where is nominal GDP going? That's the real component plus the inflation rate. That's nominal GDP. And the quantity theory of money is the only reliable, established theory for national income determination. So the rest of it is a lot of kind of ad hoc theorizing. That's one take on the thing. Now, you did say something about the wealth effect, and the wealth effect comes in through the stock market, because if we go into recession and earnings come down, that means that stock prices will come down. That means everybody's going to invest in the stock market to see their wealth go down. And when your wealth goes down, you tend to hunker down a little bit, not spend as much. And there will be a wealth effect coming in via the stock market. So we not only have the money supply itself coming down and contracting, actually it's growing now year over year at 4.2%. Hanke's golden growth rate, a rate consistent with hitting a 2% inflation target in the United States, is 6%. So it's not only the stock is contracted and come down since the summer of 2022, but the rate of growth, it's never really picked up to golden growth rate of 6%, consistent with hitting that 2% inflation target. It's a little bit hard to tell. They might do it, which would be fine, but not for the right reason, because they don't look at the money supply. They'll fool around with the interest rates. Maybe they'll stop quantitative tightening. Now, what's going on in the bond market, the 10-year, remember, I was always bullish on the 10-year, and I said for a trade, I thought it was a good thing. And it was a great trade until about a week ago when Trump laid into this tariff thing. And what happened, we had a Treasury auction this week, and usually primary dealers and foreign central banks buy around 15-16% of each one of the supply of treasuries at the auction. This week, they bought like 1.5% only. And within minutes after that, Trump called for a 90-day pause in the tariffs. That's what caused that. If you want to know what was going on, you have to understand the plumbing of the system and how things work. And that auction failure, it was a complete failure. And I'm certain Scott Bassett pressed the panic button, which Trump saw, and they dialed back on the tariffs, put the 90-day pause in. And now it's just gotten worse. The 10-year is over 4.5% right now. Now, that's going to be a huge problem for the federal budget because interest payments are accounting for 13.1% of government expenditures already, a huge thing. Because when the government pays interest, no one's getting anything for it. They're just servicing debt. They're not getting any product or paying any wages or anything. They're just paying creditors who've loaned the government money. And that's going to go up and blow a hole in the budget and cause a bigger deficit. And that bigger deficit, by the way, maybe the Fed will be under a lot of pressure to be buying some of those bonds that are being used to finance the deficit. Or maybe they'll buy because the dealers aren't buying and the foreign central banks aren't buying and the Fed starts buying. And if that happens, then the money supply will go up. That's the way to think about what's going on. Things are just warming up because you got to think of the big fundamentals. And if my big picture is right, because of the 1-2 punch between the money supply contraction and then the regime uncertainty associated with the Trump administration and the tariffs, you add those two things together and we have a recession and sales tumble, earnings tumble, and the stock market has to go down. When I say earnings tumble, remember what's priced in now is something on the order of earnings growth of 10%. That's what the consensus of the analysts say. And I say, no, it's going to be zero or maybe even below zero. Maybe profits will even be in negative territory. So there's a long way to go.